All right, we're live. Welcome to Stock Tricks with Nick, or welcome back if you've been here for the first 5 that we've done. If you're new, I'm a technical analysis trader for the most part, and I typically do these live streams on Friday at 7 p.m. Central once the week is over. But because I'm going on vacation starting tomorrow, I am doing a midweek market recap. And I guess if this time slot works better than Friday, if you find more value in a midweek recap, let me know in the comments section, because I want to produce videos that are going to give the most value to you guys. So if Wednesday works better, maybe you can find a couple of different trades, adjust your trading mindset before you do any more damage to yourself, or before taking a bad trade. So yeah, I would be very flexible to do these on Wednesday if they're better than Friday. Maybe we do a quick 15-minute live stream. These are pretty easy to do on Wednesday, and then do the traditional recap on Friday. But let me know about that in the comment section. Let's see, what do we got? Rough trading continues, very volatile. Right when you think the market's going to be heading one way, it shoots back the other. So not the greatest settings to be trading in. This is why we preached last time, go very light with your position sizing. Try to take minimal number of trades and keep a hedge on. I've been hedging with a QQQ short during this time, and then in my Roth portfolio where you can't short, I've been using SQQQ, buying a portion of that. So we'll jump to the agenda really quick and get this started. All right. So for the agenda, we'll do a quick look at the market with S&P 500, QQQ, and see that it's also telling you guys to take a little break from it, take a vacation with me. After we go through the market recap, I have so many mistakes to show this week. It's unfortunate when mistakes happen, but if I don't really call them out here and going on vacation right now, I'll probably forget about a lot of them. So the more I can remind myself that, hey, Nick, you were really dumb here. This was a poor setup you took, poor timing on this trade, X, Y, and Z, whatever I did wrong. If I don't bring that forward for you guys and for myself, I won't learn. And I'm trying to kind of pay your tuition in the market by showing you what cost me some money. So that's not something a lot of people on YouTube will do. They'll always show their winners, but and I'll show my winners because we're trying to learn good setups to take. But I'll be the first one to show my losers, and I think that's kind of what puts this channel or keeps this channel from standing out. Because you got to be honest, if you're not learning how to lose or learning from your losers, you're missing out on half the lessons to learn. So got plenty of mistakes to share with you guys so you don't make the same. I don't have too many of my own stocks to share today because I'm trying to get away, trying to not think about the market for about a week. But I did get a bunch of stocks to look at from StockTwits, so I guess this is a good time to call it out. If you don't already, follow me on StockTwits and Twitter. We got Stock Tricks with Nick on StockTwits and Stock Trick Nick on Twitter. So StockTwits, I'll do a usually 30 to 50 stock rundown each day around 5 p.m. Central Time. And then I take the 3 to 5 stocks that I'm really looking at trading the next day to Twitter. So a little bit more condensed list there. So make sure you follow me on both of those, especially on Twitter. Each Friday, I tweet out a list of very, very good traders to follow. They always tweet about their setups they're taking as well, so that gives me ideas of stocks to trade. And even more so, they've been tweeting a lot about kind of like the mentality of trading during this volatile market and what to look for. So to become a good trader, you got to follow good traders. So make sure you follow me and follow the people that I am following. Let's see, outside of the stocks that I already have written down here from you, use the comment section in the live stream, any stocks that you want me to look at. I'll do that as long as we have time for that. Shooting for about an hour 15 on this live stream, so should be able to get to almost all of them. If I don't get into any stocks that I saw on StockTwits or in the live stream chat, I'll review them and post them on StockTwits for you guys. Let's see, anything else before we kick off? Oh, and really quickly, I am still working on the Trading 101 videos. So work was very busy this week with quarter end close. I'm not sure if I've mentioned this before, but I'm an actuary for an insurance company full-time, so I'm not a full-time trader. This is one of my hobbies and what I'm really interested in, but got to pay the bills while this is getting off the ground. So if you want me to do this full-time, leave a like, comment, and subscribe to the channel. That gets the interactions going and get those YouTube algorithms to push my content to other traders that might find this valuable. So if you do find anything in this live stream valuable, I wouldn't want you to push content that had no value. But if you find something valuable, feel free to share this and leave a like. Thanks. So let's do a market recap. Let's jump to S&P 500, SPY first. So zooming out to get the full picture, you saw this V recovery, a little check mark there, and right once the, let me switch this over. Right once the the index moved over its upper Bollinger Band here, it started pulling back, and you saw tons of strength in the market. And then instead of that, 30-degree angle, once it went like 45 degrees, it was getting overbought, very frothy. You had to take some profits there. And a lot of the good traders that I follow on Twitter were calling it out. I think Mark Minervini on September 2nd was like, all right, I'm almost all cash, short QQQ on any positions I want to hold. So as he was saying that, I was trying to do the same thing. Got hurt a little bit on this first pullback, but if you watched the live stream last week, I had my most profitable week so far and gave a lot back this week. So looking at this, you saw from Friday we had that move down, but then little ramp into the weekend that we typically get on Fridays. But then Monday, gap down, pushed down further, and that's when people were getting pretty panicked. But everything started coming back. So really strong close on here, and with good volume. So you always will see more, on the indexes at least, more volume on the sharp sell-offs than any recovery. So I was really surprised to see the volume come in on this possible reverse candle here. So green hammer close at the high of the day. I do understand that a good amount of the volume came in the first hour or so when the index was lower, but still, a lot of volume, good close. We saw some follow through on that on Tuesday with higher highs and higher lows. So next step for me is I'm thinking, all right, if this was truly the bottom, then we're going to see a move to break over this purple line, which is the 8-day exponential moving average. And that was going to be my, all right, it's time to be a little bit more aggressive. But unfortunately, you saw we opened kind of right at even today, right at that 8-day exponential moving average, and could not hold those prices. Sold off all throughout the day. Bearish engulfing candle, which means the highs here were basically higher than the previous day's highs. Not exactly, but and then the lows were lower than the previous day. So bearish engulfing, a volume uptick compared to the previous candle, and this also doesn't include after hours trading yet. So we're going to see this volume probably come up back to the other selling day. So what do we take away from this? Still in this downtrend. It's not time to be aggressive if you're playing the long side. Let's see, did we close under the lows here? 321.73, not quite under there. So looking tomorrow to see, do we move under these lows, or does this provide some support here? You can see the high of day here is right around that area. What is that? 713. And a couple of these candles out here. But personally, I think the market's going lower, but I mean, it's impossible to tell. So trade anything with technical analysis, you're just trying to put as much of the probability in your favor when you're trading. If anyone says this is for sure going to happen, you know they're for sure lying, because nothing is for sure in this market. You're just trying to push probabilities in your favor, and then once you have that edge, you just play your cards. So we'll go to QQQ, NASDAQ 100. This is what I've been using to short to provide a hedge for the positions that I was in that was showing good relative strength, possible breakouts. You can see I've been working in and out of this position, tons of buying and selling as I've been putting on positions. When I get stopped out of positions, I take off that money on my hedge because I don't want to be too short on the market. I wanted to be basically net even, or maybe a little net long, because I thought I was holding stronger relativity stocks. So what did we see today? Or I guess this week, we saw a great reversal. QQQ really gapped down on Monday, closed all the way at the high, right back through these lows here on good volume. So similar to the S&P 500, I'm thinking this is getting good. The next day, another really good press forward. I did take off some of my shorts as it kept breaking through here. We did close a little bit above that 8-day exponential moving average, but then, and that's where the short-term players are looking. So I have the 8-day, which is this purple line, the 20-day simple moving average, this green line, 50-day simple moving average, red, and 200-day. Because that's going to bring a couple different duration types of traders. So we'll get the short-term traders with the purple, like very short, medium with the green, the 20-day, middle traders with the 50-day, and then some long-term traders with the 200-day. So what I'm seeing with this close is I don't want to take off all my shorts at this position because we still closed under the 50-day simple moving average. Now it closed above that, and I'm starting to get more aggressive on all the positions. I put that on StockTwits, I think about an hour before the market opened today. I was like, this is going to be a really important day. Here's what you need to watch for. We have the 50-day simple moving average just above this. If we can close above, then we can get a little bit more aggressive. If we can't, then it's time to put the shorts back on, and shorts as a hedge back on, and tread lightly. And we immediately hit resistance. I don't know if, let's see, open 272.15, high 272.34. So 20 cents over the opening price. No strength at the 50-day. Sold off all the way through the day and closed low. So now looking at tomorrow, we want to check the lows of Monday to see if they will hold as any support. Otherwise, you're really getting into this line right here. Let me add it horizontal H. A little bit lower. So I'm placing this as my next possible support line because it intersects this high right here on 623. It also provided the support for the bounce on 724. So if we do break the lows of Monday, then we should be Monday of 259-ish. Watch 251, 250 area for the next support. Maybe tomorrow we get a little bounce back, test that 8-day exponential moving average, start moving up, sure. But until that happens, you have to stay diligent with your hedge positions, stay light on position size, and keep any stops pretty tight. And yeah, tread lightly, because there's a time when all the moving averages are in your favor with the 8-day, 20-day. Once that 50-day started moving up, there was plenty of time to make good money in this market, to really press. That's not right now. Right now, you're seeing a downtrend. You're seeing breaking down of support, big volume on the sell side, very little on the buy side. And like I said before, it's just a game of probabilities. Right now, if you're going long, you don't have the edge. So why would you bet heavy when you don't have the edge? Are you in this? Are you into trading to make money or just to make stories? A lot of people are in it just to make stories, to tell their friends like, oh, I bought the dip here, it went all the way up, I made so much. But then they also have those same stories of, oh, I bought the dip and it just kept on dipping and now I'm down X%. So if you're in the market to make money, you'll do so with diligent risk controls. Always risk first on your trading. I would rather save money on a trade than make money on a trade. And let me jump to the agenda, because that I did have another thing. A little disclaimer really quick. Anything I say is my own personal opinion. Take this as kind of a starting place to do more research, and there is a lot of risk in trading, so always do your own due diligence. Really quick though, as the market's selling off, very famous trader Jesse Livermore once said, "Don't become an involuntary investor by holding on to a stock whose price has fallen." So basically, if you're going to be a trader, be a trader. Have stop losses, have small position sizes when the market's choppy, and don't ever fall in love with a single stock. If you want to be a trader and compound your profits, you got to live with very strict risk control. And once the stock starts moving against you, get out, because if you don't, this is a chart that we looked at last week. A 10% loss, you need 11% just to get back even. 20% loss, you need 25% to get back even. 50%, you need 100% gain to get back even. And if you're a trader that had a 50% loss, it's very likely that you're going to have trouble getting 100% gain to even get back even. So always attack trades with risk controls first in your mind. How much am I going to risk on this trade? Always have either a dollar amount or percent amount on your trade that you're willing to lose. Once it hits that, get out. For me personally, especially while this market's volatile and in a downtrend, I have a 5% position size on each of my trades, meaning if I had $10,000, I would put, all right, whatever, easy math. If I had $100, I would put $5 in a trade, a single trade, and then use a stop loss of around 5 to 8%. So at maximum, I'm only risking a little bit more than 0.5% on any single trade. When the market's in my favor and everything's going great, all the trends are going up, then I'll have my initial buy position be 10% and keep that risk. Still keep the stops around 5 to maybe 8% at that point. But right now, not time to have heavy position size, not time for loose stop losses. You're trying to protect your capital right now. And really quick, look at me versus the market. I had made great traction coming through this last week. If you watched the video last week, it was a great time. I found good breakouts, and the hedge with QQQ is paying off as that sold off. And I gave back half. I gave back half because of a lot of dumb mistakes that we're about to go through. But that's how quickly it can happen. If you don't live by your risk controls, which I did not, I didn't do a great job with this week, you're going to give back a lot. But right now, with the vacation that I'm going on, I'm not going to have any access to computers, so I sold everything. I'm completely cash, and we'll see how this chart looks at the end of the week if the market continues to sell off. So you could see that the NASDAQ and S&P 500 were beating me when the trend was up, but the second it starts pulling back, it pulls back hard, and with good hedging, good position sizing, I was still able to make money and kind of press up here. So you can beat the market by keeping your losses low. You don't always have to beat the market when the market's going up to beat the market. All right, let's see. All right. Welcome. Just going through the checklist. Oh yeah, really quick. Someone on StockTwits asked me about TQQQ, and this is something that I've been getting a lot of questions about lately, is these leveraged ETFs. I played them a lot in college and didn't really understand the decay behind them, where if the market goes down 10%, these would go down 30%. And like we pointed out with the chart here, if you go down 30%, then you need then you need to go back up 43% just to break even. But it doesn't work out with the market here. It's always gonna let's see. As I say that, so TQQ has been very hot, but you can see from the peak here to where we're at right now. Oh, need to change this to segment. From the peak here to the low, we're at down 36%. So if you're trading this, you want to keep it like intraday trading. You don't want to be holding overnight, because the overnight swings will eventually wear this out all the way. This has been historically very strong because QQQ has been strong, but not something you want to hold for a long period of time. All right, let's go with the list of my mistakes now. So first thing that I did very wrong was I got aggressive in this market early on in the day. So I always do my research once the market's closed, so I can take notes on all the stocks that I want to trade the next day. Then I typically will put those trades in. In pre-market. So if they break over the whatever price that I'm looking to buy, I'm always buying in the uptrend while there's momentum on the stock. Then I'll get in whenever the market opens. But what I did really poorly was a lot of the stocks that I got in opened up right at 8:30. Well, okay, so 8:30 Central Time, so 9:30 Eastern, like right away. So I was putting on trades pre-market, and they all triggered. A lot of them triggered in the first 40 minutes, 45 minutes of the market being open, and a lot of them got head faked up and then shot down. So even though the bell is at 9:30, 8:30, wherever you were at, especially in these choppy markets where you're just trying to hit singles and doubles, not really pressing for home runs right now. I should have been waiting until like 9, easy math. I should have been waiting at least 45 minutes to put on any new trades. So let's walk through a couple that I put on right away and I got crushed from. So first one today was Plug. So this one looked great. It has all the things that I look for in a stock. Already a market leader. It's been up, let's see here, 230% from June, so really good strength. And then it started coiling in here, dropped down, but then showed good relative strength through here. So what I did was I drew a diagonal here and then wanted to have a lower risk entry by drawing a downward diagonal here, because I wanted to put my stop losses, I wanted to do a bracket stop loss where I put one just below the 8-day exponential moving average, this purple line, and then one under the 20-day / the low of the previous day. And the only way I was going to do that with an overall 5% stop loss was if I kind of cheated down here and got in on this diagonal, on a break of this diagonal, instead of this one here. But kind of taking these away, you can see on this downward diagonal, I bought right when the market opened. So let me change this to today. So you can see it broke through. I bought, what was the price I got in at? 13.18, and immediately it just gave back all that and started pressing down. I took some off throughout the day, and then I think I got out all the way. It doesn't show the other flag here, but what was the other price I got out at? I think it was when it was down like 1%. I sold out in 3 parts on that trade. One kind of right away when it immediately went against me, and then the other 2 as it was kind of breaking under the 20-day, maybe when it was just down 1% from the previous day. So because I bought on the break over the diagonal and I sold when it was down 1%, that's 3%. My position size was small, so it wasn't a huge error, but like there's no reason why I should have taken that trade that early. I knew the market's in a downtrend, there's downward pressure. I got greedy, and it didn't pay. Should have waited if I waited the first hour, I would have seen it come up and then shoot right back down, and that's a no trade. It's a no trade. So that one, bad all around. Next we have KIRK. And this one was, again, I'm trading good setups, but there's a difference between trading good setups and having good trade management. And if you don't have both, especially in a shaky market, it's going to hurt you. So with this one, you saw, I don't know, let's just take it from here. So since May 14th, you're up 1,100%, so huge gain. And then we saw exactly what we want. We want a pullback, so it's a little aggressive of a pullback, 56%, but then the next one is 42%. And then I saw this tiny pullback right through here. That's 11%. So each pullback, each consecutive pullback was on less and less magnitude. So I'm thinking, all right, this is coiling tightly. The price relativity compared to the NASDAQ, which has been the industry leader, is rising a little bit, even though it's in a downtrend here. So what I did was I bought on this day 835-ish, 837 was my average. So again, drew that downward diagonal, didn't draw that great. So I could get a good stop loss between the 8-day exponential moving average and 20-day simple moving average. Because I did brackets, I got stopped out of an initial position because this opened up the first 45 minutes up, triggered my buy order, then pressed down, hit my first stop, so got me out of half. And then I did buy back that same position kind of closer to the close because it showed a good close. Closed above both the 8-day exponential moving average and 20-day simple moving average, and had an uptick in volume. So because I'm playing with a smaller position size, I decided to bring it back. And again, this morning I was thinking, Nick, genius move getting back in. That was great because it opened and immediately ran up. It was up, I don't know, 5%. It says 7%. I think it was up like 5% today. And let's go to the daily. You can see how quickly it moved. So same thing. Yeah, day started here, shot up. These are 5-minute bars, right? So 15 minutes, hits the high of the day, and then immediately sells off. And I'm a chump because now I added back to a position that I was stopped out on half of it. And now I'm feeling the brunt of it again. Let's go back so I could see where I eventually stopped out at. So stopped out eventually at 818. So for my 835, what is that? 18 cents, 2.5%. So again, not a huge loss because I was trying to be aggressive with my stops here. And at one point today, I cleared out all of my positions and went to cash. So did get out at 818 here. Looks like it was a good thing because it dropped to 785 and on big increased volume here. So watch the 20-day simple moving average. Maybe this does bounce here and it starts moving up again, but not something I wanted to worry about. So. But again, this started, I took this position because it opened up in the first 45 minutes. Maybe I still take the position as it goes through that later on in the day, but I would have missed out on that like half loss that I took because I took the position too early. So that's KIRK, KIRK. GOGO, I talked about this last stream too. This was a beautiful high tight flag, went up, let's see, 163% in 9 days or so. And then I drew this diagonal down here. So I got in my initial at 10.05, sold some into strength because at least that's one thing that I did well the past 2 weeks was every time it goes through a multiple of my average gain, I've been selling 10% of my position, regardless of how strong the stock looks. And that did save me a little bit of cash this week. But this came all the way down, hit my stop. I'm out for the first trade. But I didn't want to throw the stock away because if it set up constructively again, I could get in and make some money. Because I did see this volume increase on the buy, volume decrease on the sell days, and volume decreasing on the sell days is exactly what you want before the next pop. So again, drew a diagonal down. So when this moved up in the first 30 minutes, I got in at 990, 983, whatever it was. Got stopped out of half as it broke under the 8-day exponential moving average, and then I just scratched the trade at, what was the rest of it, 947. So probably gave back basically all I made last week in the stock because I was too aggressive buying in the first 30 minutes, 45 minutes on this. But thankfully I did get stopped out and I listened to my stops here because this fell all the way to 868. This goes back to never falling in love with a single stock because I did save myself 9% on that trade by listening to my stop. So that's GOGO, and we'll do one. I guess we'll skip to the next issue. So lesson learned there, choppy market, give any breakouts 30 minutes, 45 minutes, even an hour. Because a lot of big traders or a lot of hedge funds during a market pullback are getting hit hard on any large positions they have. So anything that they can make a quick buck on and kind of soften up their P&L, they'll be doing it. So a lot of the breakouts that you see are going to be aggressively sold off until the market overall starts ticking up again. So even if we start seeing some up days, anything that breaks out, you're going to see pullbacks. And that kind of goes into my next mistake. But give yourself your first hour of the trading day off. Don't put on any new positions during that. So VSTO, the mistake I made with this was an order mistake. So kind of zoom out, get the picture. Great move higher, 220% since May. Pulled back constructively, bounced up. I was waiting for a bounce and then another pullback, and we got that, so I drew that downward diagonal. It was perfect with that 20-day simple moving average here. So I set a buy order last Friday for, 1955. If it broke over 1955, I was gonna buy in. The problem was I made the order a good for the day. So when Friday ended, that order didn't execute because that price was never broken, and the order was canceled. What I meant to do was put a good till close, meaning like, I think it's 60 days is the maximum on good to close, but until you manually close that order, it will still trigger when the stock breaks over that high. So I had thought that I had that set. So when I see this take off, I'm not checking I didn't check my portfolio thinking, oh, great, I'm in this because I thought I was in it. I put the order in, but I didn't put the right type of order. So this is just going back to just a dumb mistake, really dumb. So always check the orders that you're placing. Make sure they're correct for the duration. Make sure you have the correct price. Make sure you're using stop versus limit where you want to be doing that, because this was one where it jumped up 14% in one day. And granted, the next day, it fell right back down, like we were talking about earlier. A lot of the things that are going to break out are going to be aggressively sold down as people try and soften up their P&L. But I would have taken some profit into this. So 14%, that's 2.5 multiples of my average gain. I'd say 2 multiples of my average gain. I would have taken profit twice during that. And then moved my stop to my entry and would have gotten stopped out for a little bit of a gain. And that would have softened up my P&L. But because I did not put the right type of order, I missed out on this trade entirely, and I'm kicking myself. That was only my mistake. It was only my mistake. So something I'm going to try and be really diligent about going forward is double, triple checking the order, all the aspects of the order. And this is kind of, this mistake happened because I was over trading. I had too many orders on. I didn't have just 2 or 3 stocks that I was watching. I was watching maybe 12 to 15. And by over trading in a choppy market, this is just the consequence of that, but also something to watch. So that was VSTO. Here we have CMBM. So I got a great entry on this one. Bought when it pulled back to the 8-day moving average and then started bouncing up. So got in at 15.26 on that. So 15.26. Let's just draw that out. So right around there. So that allowed me to have a great stop loss while I put on the position. Sold some into strength. And then we got this red candle close outside of the upper Bollinger Band, which is always a signal to me to take some of the position off, which thankfully I did. I sold, let's see, got some sold pre-market at 19.25 and then some at 18.92 during the day. So good sells there, selling into strength while the market is very shaky. That was a good thing. And then I thought I had this was the one where once it started pulling back, I had my stop at my entry price to kind of cover any downturn there, but I wanted to just sell everything. So while I was selling through my positions, I put a limit order on this for 18.10. So right under here, yeah, right around here, I put in a limit order, 18.10, and then I figured that it would get filled, but because this is a lighter volume stock, there's that spread between the bid and the ask, so it doesn't always get filled. And while I was going through other stocks that I was selling, this just kept plummeting. So thankfully, I only had about a third of 5%. What is that? 1.6% of my portfolio still in here, but let's see, what did I eventually get out at? Got out at, oh yeah, you see. So got 3 filled at 18.53. That was my limit order. And from 18.53, I eventually sold out at 16.48. So again, because I was trimming on the way up, this isn't going to wreck my portfolio type of mistake, but when you're getting out, use market orders, because most of the time you're talking about a few cents, a few dollars on a position. I got greedy, tried to get it filled with a limit order while the market was in sell-off mode, and that hurt me because this dropped, man, from 18.53. That's, geez. So yeah, that's like a 12% mistake. Terrible, shouldn't happen. But when it does, take note of that in your journal, highlight it, really feel that pain so you don't make that mistake again. All right. Mutual funds. All right, Paul, we'll get to your question in a little bit. And then I wanted to talk about one more error before we get to the technical analysis. And this is just don't compound your errors. If you made a mistake, admit you made a mistake, get the trade off, take position size off immediately. Like Jesse Livermore said, don't become an involuntary investor. If you're a trader, be a trader. If something works against you, get out immediately. Here's two examples of when I compounded my errors. So INO, this is in a big downtrend, but popped up on volume and then kind of created a flat top here. So I said if the stock was going to break over this, I wanted a position because I saw volume lightening up on that kind of pull back as this flagged out. But that order was triggered right away, first 45 minutes, and worked against me. For some reason, I didn't have a stop on this. I'm not sure if I made one and it didn't trigger, or if I just made this and was too busy over trading and didn't get a chance to put a stop on this. So I bought at the top here, went all the way down to the 50-day simple moving average. So already past my 5% threshold right there. And then today, down another 5%. I sold some in pre-market when it was just like down 3%, sold the rest there. So this is going to be one in my journal that highlighted lots of errors here. I entered too early in the day during a shaky market, and I didn't have a stop. So because there's double the errors, I compounded the loss. That's something you don't want to do. And last one, let's see. Lazy, L-A-Z-Y. Again, really nice setup here. Coiling nicely, had another pullback, but a higher low here. So I wanted to take the trade with a break over this diagonal. I set the order wrong. I set it as a limit order. So that filled when the price was under the price. Typically I set them as stop orders where I want to be buying as the stock's breaking through that point. Unfortunately, just a dumb mistake, set it as a limit order. So it got triggered right away at 8:30 when the market opened, 9:30, whatever your time is. And instead of immediately taking the trade off because it didn't fulfill what I was looking for, I just kept it on because it was holding steady. And then eventually I sold out at 12.91, got filled at 13.01. So again, this isn't a huge mistake, but it's kind of highlighting, don't let a mistake that you make compound and hurt you further. If you put on a trade that you didn't mean to put on, take it off right away. You can always sell, you can always buy back. Don't let your mistakes run. You want to cut those immediately. So you use the comment section on any mistakes that you guys made this week or in the past that you want to just tell the group about, because hey, we're all trying to improve as traders. So I'd love to read through any of the suggestions that you guys have to cut down on any trading mistakes. So I see one comment, Paul. So for mutual funds, I have some, like my 401k in mutual funds, but personally, because this is like a technical analysis trading channel, you don't day trade or you don't swing trade mutual funds. They're great for just putting your money in, forgetting about, and they typically do as good as the market does, but I haven't looked into any mutual funds myself. All right, so let's go through some technical analysis from the comments on stock twits. So ATVI we'll start with. So zoom out, has been a good stock during quarantine. Let's see, up from let's put it to yesterday, up 54% from the lows here, but hasn't really been taking off as the market kept on extending. So the top was what, 9.2? Yeah, so you saw this already starting to downtrend here while the market was still extended. So that's showing this stock has relative weakness compared to the market. That's not something you want to trade on the long side. You want to be buying stocks that are strong, that are getting stronger. So once it came through here and started moving down, not a stock that I would trade. But we did have some, now as the market's pulling back, showing some good relative strength as some of these quarantine stocks are doing better. We did get a sell-off today with the market, but at least until after hours volume, that did come on low volume, stopped out just below under the 8-day exponential moving average. So not a stock that, like, if you're trading stocks, you're never buying while the stock's moving lower. You want it to move lower, create a little base, and then pivot higher. If you're buying in a downtrend, chances are you're just catching a falling knife and you're going to get hurt more often than not. So what I would like to see from this stock is if this diagonal support can hold. So if this moves down a little bit lower, but then bounces up, then we're showing good relative strength as the rest of the market stays shaky. But with the entire market, the shaky, I'm hesitant to put anything on right now. So that's ATVI. Let's go MAXR, and I've been getting lit up on StockTwits for not trading this a lot because it has been showing great relative strength, up 176% since June through the peak here. Pulled back, popped up, pulled back, and you can see a few times here it tested that 8-day exponential moving average, but couldn't hold any of the prices above that. So after this close over it kept on trending under, but got tighter and tighter here while volume lightened up. Price relativity compared to the NASDAQ was relatively flat. And then we get increase in volume, breakout, and just continuation here. Now, again, as the market stays shaky, we're pulling back, ideally on lower volume, which is what we're getting. And then today just got clobbered. Everything was getting clobbered today, but we saw a break under that 8-day exponential moving average where yesterday it found support at that area. So that would have been where I had at least part of my stops. That's why it's important to look through the chart, see where places are bouncing, and then always put your stops a little bit under that area because algorithms do like to go to that area and knock any stops out. But so I would have had a stop just under there, at least part of my position, and then probably would have gotten stopped out on the rest here with a break of the 20-day simple moving average. So what I want to see is an immediate rebound here with increased volume. I don't think we'll see that. We might see a test of this 50-day simple moving average because this is still going to be moving up. So we'll see how this holds as support going into the rest of the week. So that's MAXR. Rocket, yeah, I got this as a request, and I don't trade IPOs, so take what I'm saying with a grain of salt here. Definitely not an expert on this stuff. Just looking at this trend, we do see that 8-day exponential moving average providing that resistance. Broke up above for a second, then moved back down, could not hold those prices, closed lower on that day. High of the day stopped out right there. Today's high, while things were kind of okay in the market, went over and then got rejected, closed well below. So this is in a downtrend right now. You're not buying in a downtrend. You're waiting for it to base and press higher. But again, not an IPO expert. Don't trade IPOs usually, so take what I say with a grain of salt there. MVIS. Let's see, what kind of volume does this have? 5 million, decent volume. Not a stock that I'll trade. I really like stocks over $10. I'll trade them like $4 through 10, but if I do that, I'm doing it on light position size. So this is another area where not an expert on these really, really light stocks. I can give you a little technical analysis look here, but take this with a grain of salt as well. Broke out, good volume on that breakout after good consolidation. You saw pullback. Let's see what that pullback was. 59%. That's the thing with these small stocks. Really hard to get a conservative stop loss on this. You're likely to get stopped out for a loss whenever you do that. So as a trader that always thinks risk first, this wouldn't be something that I would trade, but kind of good consolidation, breakout on good volume, and now a pullback on much lighter volume to that 50-day simple moving average. That's where the low found some support, closed right at that 8-day. I guess watch that area, watch the 20-day simple moving average, which kind of coincides with the low on 918 as support, but not something that I'm going to be trading. HLIT. Let's see, comment section. Yeah, any other stocks that you guys want me to review, throw in the comment section. I'll be working through them. All right, so HLIT, kind of a similar story here. Under, it's $5, so I'd look at it. We saw the 200-day simple moving average coming up here, so a little bit long-term traders will be watching a break and close over that, and you could probably get more volume coming in to take this even higher, but stopped out right below that area today, opened higher, pressed up, but could not clear the previous day's high. And with the market acting in a downtrend, that would be the sign to at least take off some of your position as it started moving back. Broke through the 50-day, the 20-day, 8-day exponential moving average, closed right back at these lows. Yeah, 9% down. That's going to stop most people out with conservative stop losses. So watch the low of the day today, and that coincides with the low of the day on 9/11 for any support. If it breaks under that, then you're starting to look at this lower base of 463, and you don't want it to move that far against you. So if something's working against you, take some position off, because you want to be betting big when things are in your favor. If you're already wrong, try and get as light as you can, because you want to be losing light and then winning when you have more money on the table. So if something's working against me, that's why I love bracket stop losses. It'll take me out of half my position early on, and then when I do completely get stopped out, it will be for a lot less money. So that's HLIT. We had a request for gold, and just looking at First Majestic AG. So gold is something that I tried to trade, I think last week with GDX, because I saw the same pattern of I guess the pennant doesn't really work on this one, but saw kind of similar lows here. And then each pullback was on less magnitude. So if you get a break over this with some buying volume, maybe it takes off further. But that was not the case. You saw 3 times it tested that upper diagonal. 3 times it failed, moved lower on the day. So that would have been Monday. This gap down closed under the under the lower Bollinger Band. So when I'm trading a breakout stock that's working in my favor, if we get consecutive closes over the upper Bollinger Band, I'm not taking position off unless it's a red candle close, meaning like it went much higher then closed lower, because that's how momentum and breakouts begin. It comes from volatility contraction and then a breakout and then consecutive closes over the Bollinger Band. The opposite's true on something like this. When you get closes under the lower Bollinger Band, closer to the low of the day, you're going to find continuation on the downside, which is what we saw here. We saw little consolidation day, light volume. The trend's down. That's probably where it's going to continue the next day. That's what we saw today with another gap lower and then all day just pressed under. Now it's under the 200-day simple moving average. No reason to still be in this if you're a trader. If you're an investor, it's different, but don't become an involuntary investor. If you're going to be a trader, stick to trading rules. So that's AG, gold. Microsoft. Let's see here. This was one that I had taken earlier on because it did have that volatility contraction pattern set up where each pullback was on lighter magnitude, got in on this breakout. And see here, we get closes over the upper Bollinger Band, and I'm thinking, all right, this is moving. Market was still in an uptrend at this point. This is 828, so a couple days before the overall top. As it started moving against me, I sold out, and then with this large candle, I sold the rest once it cleared under these two lows. So again, this was good risk controls here because it allowed me to take some profit up here, stop me out under these lows just above my entry, so a winning trade before it went much further down. So now we're looking at this. Definitely still in a downtrend. You see big selling volume, light buying volume, and then as the downtrend continues, selling volume picks up, buying volume's less. And now we get a close under the 8-day exponential moving average, a full red candle, never a good sign. And it's under all of the moving averages except for the 200-day simple moving average that I have on my screen, closed under the low of the previous day, not a good sign. So what am I looking from this stock? Now this has lower lows. So this is something that you got to be even more aggressive with your risk control at, because it's not like you have higher lows and this is something that is going to be bouncing at a higher price. If this moves lower, it's going to take a while to find this low, and you don't want your money in a stock that's going to take a while to find a low. You want something that's going to bounce right away, or at least go through a stop right away to get your money out as soon as possible. So not something that I would be in right now. Again, because we're filming this right now, the total volume today doesn't include the after hours. We'll see how that shapes up tomorrow. In an ideal world, you see this obviously reverse and close over that 8-day, but it's still going to take a while before I get interested in Microsoft. Let this play out, let this find a base and kind of break out once, get that sold off as people soften their P&Ls before I try and trade this. And that was Microsoft. Got two more. Zoom. So this one has been a monster. So you saw on earnings, they moved up, let's see, 40%. You're not buying on this candle, absolutely not buying on this candle, because at this point you're chasing. You never want to chase a stock after it's broken out. You can add it to your watch list, see if it pulls back to a constructive area, finds a base, pivots higher, then buy on the pivot. But personal rule of mine, I never buy when a stock's extended 10% over its base, and 40% is over 10%. So what I was looking for here was a pullback with low volume, which is what we got. Dipped under that 8-day exponential moving average. The kind of low here happened as selling volume lightened up to its lightest point. And then once we broke over here, this isn't a trade that I took, but I was watching it. Made a higher high, higher low, closed over the 8-day on another increase of volume. So that shows me the strength. This was selling off as the market was kind of selling off. Let's see, that's 9.1, so 9.2 is the market top. And then here again is red candle close over the upper Bollinger Band. At least take some profit off, because if you would have taken profit off there, you could have added on that same capital when it broke back over the high of the day here and saved yourself some worry and saved yourself some money on that piece. But after it closed over there, showed great strength all the way through here. Had one day where it pulled back on lower volume, bounced off that 8-day exponential moving average, showing support there. Continued in this uptrend. One day where the market gapped lower, and then pressed higher. Again, showing strength that it closed over the 8-day. That's why the close is always more important than any intraday price movements. Always watch the close. Close higher, you see relative strength. You see relative strength just taking off here. This has been a monster. Look at this awesome volume in the buy. And then today's candle is a little bit concerning. You got a spike over the upper Bollinger Band that was sold off with the market. It did hold 1.6% today, but with everything else going on in the market, might be worth it to take just a little bit off here, lock in some profits, because as you saw, this 8-day served as support on the way up. So with the market shaky, we might pull back down to that 8-day, and that'd be 11% down. So take some position off here. Have your stop below this 8-day, and you're working with profit if you got in at a good low risk. If you bought in at the 40% up day, now it's getting aggressive. Now you have to actively manage your position to stay profitable. But if you got in down here, chances are this is going to move around, but you'll have plenty of opportunity to take profit before it starts working against you. So great stock to kind of watch the chart of, because you saw exactly what you needed. Pullback, low volume after a good breakout, showing good relative strength the entire way through here. Plenty of time to take profit as it makes multiple of your average winning trade. And then a signal here to take some profit, lower your overall risk. And then the last one I got from StockTwits, and kind of the last call for you guys to use the chat on anything that you'd like to see, is Marathon Peak Corp, so MPC. Let's see here. So something that has not been a market winner, as less people are driving around, there's just less use for oil. So already something that I'm not trading. I'm trying to trade leading stocks that are going to be showing good strength, keep moving higher. But if this is something that you're in, as this was coiling, and once it started breaking down and failing to hold prices over that 8-day moving average, then you needed to start taking position size off, because you got then consecutive closes under the lower Bollinger Band, got a little bit of a buyback here, but still could not close over that until, let's see what this day is, 9/16. Even then, not a strong stock. You want to be buying strong stocks that are getting stronger, not buying weak stocks, and then coming an involuntary investor as it moves lower. So it was clear that it wasn't breaking and holding over those prices, as it kept closing right at those areas. Pulled back. Tuesday's high stopped right at that 8-day. Today's high stopped right at that 8-day, pressed lower. Now is lower than all the points until, let's see what this green one is, 8/14. So that's the area I'm watching. Is there a little gap in the chart too? Or is that filled? Let's see. High 28.62. Low 28.70, basically filled. But yeah, so I'm watching the low of the day today and that 5/14 low to provide any support. Again, not something that I'm in, not something that I would trade, but if you're in this now, have your stop set. If it's a loss, don't compound your loss. Don't compound your mistake. Don't lose any more money. So have your stop set, let it play out, and then stick to strict risk management going forward. All right, so those are all the stocks that I got from StockTwits. I did have a couple breakouts that I wanted to talk about that I don't think I got to talk about last time. First one is APPS. So this one had been a market winner and had that good volatility contraction pattern where each of the pullback was on lower magnitude, and it created this beautiful setup here where I got in on the break over the high of 914's high. That was just after the open. So this is one of the few times that paid off since the market's been choppy, but broke out over the highs, took some off as it made multiples of my average gain because I'm trying to book profits during these uncertain times. Moved up another 10% the next day, took more off. As it broke under, hit one of my minor stop losses, but then really created this high tight flag through here. And if I wasn't going on vacation, I probably would have put a buy order if it broke over this diagonal, because it was showing such great strength as the market was selling off. Look at this unbelievable relative strength. The 2 down days was on very, very light volume. So this had all the makeup for another continued breakout, which you saw it did. It moved up 7.5% at the peak today. And I was selling aggressively as it was going through the 7.5 and then sold the rest when it was at like +4 because I was, again, just trying to liquidate my entire portfolio as I go on vacation. But this is a good setup that you are looking for if you're still trading. So again, good entries will keep you in stocks as they break out and kind of shake around. So that's APPS. Peloton, traded all throughout quarantine, but was waiting after earnings. I never trade earnings. Pulled back, but showed good relative strength. You saw after the earnings pullback here, kind of a little bit of an uptrend there with relative strength. Bought on the move over the high from 917 and closed at the high of the day. Next day, the low of the day was above that 8-day exponential moving average. As it made multiples of my average gain, took some off. Next day, had an inside candle on a little bit less volume, so I'm still thinking this is good. Low of the day, bounced off the 8-day exponential moving average, so showing support there. And then as this broke up through the upper Bollinger Band, took a little bit more off, and then sold the rest when it was at +1, +2% today. I think, what was the time? It was like 1:30 my time, 2:30 Eastern as I liquidated everything. Thankfully I did, moved lower, but still showing great strength. If the market pulls back, continues to pull back, watch the 8-day exponential moving average, watch the low of 922. If that breaks under, then you're getting back into this base, and chances are if you got that good low risk entry right there, you want to be protecting your profit because you never want to make a stock that's over 10% profit start moving against you for a loss. Personal rule of mine. So once it does make a multiple of my average gain or go over 10% profit, I always put my stop loss at my entry to protect that. Last one, Pinterest. This is one that all the traders were waiting for to break out after 40% move up on earnings. I did trade it once at this good low risk entry there, played it on the gap, sold as it kind of went up and then moved back down, that red candle, red hammer down, just got to scratch the trade there, kind of moved around since then. But then here got this good pennant pattern. So drew my diagonal like that. So actually, yeah, so I did cheat a little bit. I think I drew a separate diagonal using the peak here downward so I could get a great low risk entry where I'd have that 8-day, the 20-day, and the low of 917 as my stops. So really low risk, high reward entry. Paid off the next day. Finally, the breakout that everyone was looking for. I think it was up 9% on high volume. Today, it hit +4, +5% or something like that. I sold again a little bit at 41.57 as it went through there, and then just sold the rest at 40.78 as it was pulling back down just to get everything out. So still one to watch for. Good volume coming in, still stayed in that top quarter-ish part of the candle. So ideally this moves sideways as the 8-day exponential moving average comes up to provide support. Hopefully the market doesn't continue pulling down, but it's down 3% after hours. We'll see what that means the next day. After hours doesn't always mean everything. So, and really quickly, Tesla had their battery day yesterday after hours. This was a classic buy the rumor, sell the news. Definitely not something that you're buying going into the event, because that's a 50-50 coin flip. If it's a great event, it goes up, but there's so much was already priced into the stock before the event. We heard Tesla's getting put in the S&P 500, and battery day is going to be the biggest event ever. It was not, did not get put in the S&P 500, so this is really under some good pressure now. We had talked about this convergence of the 8-day and 20-day simple moving average around 420, with the break under that, close at 380. Now you're looking at the 50-day simple moving average for support, which that did mark the pivot last time. But again, you're not buying on a downtrend. You're waiting until it starts moving up, breaking over the previous day's high. So, I mean, hopefully this bounces off the 50-day and bounces right back up so we can get the rest of the market going again. It's much easier as when the market's in an uptrend, even though I will short QQQ as a hedge and I might make money on that hedge. That's not my main goal. The hedge is really just there to protect positions that I'm trying to make money on. Ideally, all moving averages are in an uptrend and we can make easy money. But with a market like this, it's really tough to make money. You want low position sizes, tight stop losses, maybe go completely cash for a little bit while the market kind of sorts itself out. Going into the election season too, it's going to be really volatile from here. Hard market to make money on, and we got 7 months time to make great money. 7, 6, whatever. There's a time and place to really bet big and go for home runs, and this is absolutely not it. A lot of the great traders that I follow on Twitter are all saying the same thing. Many are going to cash, some are going into a short position, and something that Mark Minervini always stresses is sit out power, which kind of goes back to my chart where I'm catching up to the S&P, I'm catching up to the NASDAQ when they're pulling back. You can beat the market by not losing big when the market's losing big. Keep your capital for when you have the probability in your favor. So let's see. All right. So with that said, that's all the technical analysis that we'll cover. If you did have a stock that you want me to review, throw it on StockTwits or Twitter tonight, and I'll get through any of those before I take off on vacation. But with that said, I'm going on a week-long road trip to Montana, so won't be around a computer, won't be using my phone, so you won't see me on StockTwits or Twitter most likely for the next week. I'll be back on Thursday. So I will do a recap next Friday, but hopefully, I won't have much of my own trades to talk about then. It'll be more so building a watch list for the following week. This was the first time we did this live stream on Wednesday, so please let me know in the comment section, did you like Wednesday, a midweek recap, better than Friday night? Do you want me to do like a 15-minute what's on my watch list, what am I trading on Wednesdays, and keep the recap on Friday? I could do that as well. I'm also still working through materials for the Trading 101 videos that I'm making, so if you have any ideas of things that you want to see that maybe beginner traders that would want to see, leave that in the comment section below. And please, if you've gotten any value out of these live streams, leave a like on any of these videos. The comments, likes, subscription numbers, that really helps my channel grow, because the YouTube algorithm will see that interaction going, will see the likes the number of subscriptions that I have, and it will push the content out to more traders. And right now I think YouTube's flooded with a lot of traders just showing their wins, showing how easy trading is. And during a very strong bull market, yeah, trading is easy. But if you're not equipped to trade light, trade less aggressive during downtrends, take your foot off the gas, protect your capital, all that money that you're going to be making on the uptrend can be just as quickly lost. So I think this is one of the channels that I've seen where I try and highlight all of my losses, all of my mistakes, so any money that I lose will pay your tuition in the market. So if you did find any value, leave a like, comment, follow me on StockTwits and Twitter, and have a great rest of the week, and I'll see you next Friday.